The conversations continue here in Davos 2025. As I've been telling you, there is a large Indian delegation here, not just the central government, but also states. And in fact, one of the states that has been making its presence felt here in Davos is the state of Tamil Nadu. Joining us now to talk about what Davos 2025 looks like is the Industry and Commerce Minister, TRB Raja. Always a pleasure. Many thanks for joining us here on CNBC-TV18. You know, let's start by talking about what's new this time around. It's an all-in-one approach that India has decided to take, putting the Indian central government and its states under one roof, and you're sharing space with Maharashtra.
Yeah, I mean, after all, we are the double engine that's actually running this amazing country. So, yeah, I mean, it was a lovely gesture. We're trying to put in a united front. I think that's how it needs to be when India goes out to the world talking about manufacturing, its prowess in industries. So I think that's a nice thing. It's a good start. We've had very good interest for Tamil Nadu as well, especially from other countries, especially the Middle East and the European countries. Loads of good meetings lined up. So yeah, that was a good start, and we're hoping the union would help us find more investments in the Tamil Nadu.
It would help you find more investments. We'll have to wait to see. But I don't know if you can notice there's a little pin right there. That is the Tamil Nadu campaign. Bullish on Tamil Nadu.
Absolutely. Yeah, bullish in Tamil Nadu. Join the bull run, we're saying. We are on a massive bull run. Tamil Nadu has been doing amazingly well over the last 2-3 years now, after our Chief Minister, Honorable M.K. Stalin took over. The Dravidian model of growth is what we keep talking about, and it's seen amazing results in Tamil Nadu. Tamil Nadu has been, we've got over 10 lakh crores worth of investment in just the last 3 years. And not just MOUs, these MOUs are also being translated into jobs for Tamil Nadu. So I keep saying this, my Chief Minister, he doesn't look at the investment numbers when it comes to just the crores of amount of rupees that's being invested into Tamil Nadu. He looks at the jobs that are coming out of those investments, and that's what we're really proud of.
So let me ask you, you know, in terms of the commitments that were made when you held your investor meeting, which was at the start of the year, over 6 lakh crores, if I remember correctly, in terms
664,
of
180.
So what will that eventually translate into? How much of that is already operational, and what does it mean in terms of job creation?
Okay, I was just going to do this at the next assembly, but now that you've asked me,
you can give us a preview of what you're going to say.
So when that happened, and that global investors meet happened, there were so many naysayers. They said these are just frivolous MOUs and these are not going to turn into investments. But people started noticing the next month onwards, we started breaking ground for investments that were signed on that global investors meet on the 7th and 8th of January 2024. Now, after a year, there were so many of them who said only 20-30% of these MOUs are become jobs all over India, and that's the norm, right? But I promised them at least 50%. I said we will push for 60, but I will only be happy if it goes above 70.
Okay.
Now, I can tell you very clearly with facts. I've got photographic evidence. I don't even trust my team. So I've asked them to send me photographic evidence of groundbreaking, of foundation work starting. So I can say we've already crossed 65% of those MOUs. And I'm very, in my heart, I can see that I'm going to push the 75 limit also.
Push the 75 limit and achieve that by in 2025?
The convention, when you talk about investments coming in, the MOUs are for over 5 years, right? So it doesn't happen overnight.
Right.
So I'm saying these are, once you lay a foundation, that means the factory is going to come up and it's confirmed, that the jobs are confirmed, right? So that's the way we're going. And looking at that, I'm sure that we're going to breach that 70% mark very soon. And I do see I do see 80 also possible on the horizon. Yeah.
Okay, so you're setting a target right here on CNBC-TV18 of what you hope to achieve. But let's talk about FDI, and that's the reason why you're here in Davos, is to try and bring more FDI into India, to try and bring more FDI into the state of Tamil Nadu. You have seen, of course, a year-on-year increase as far as FDI is concerned. What's the hope? What are you targeting on FDI?
FDI is actually not a really good way of matters when it comes to investments. See, it's skewed towards HQs of companies. Tamil Nadu is a manufacturing state. We have the industries there, but all the headquarters are either in Noida or in Mumbai. right? Closer to Delhi or to the financial capital in Mumbai. So we really don't look at the FDI numbers as ideal markers of growth. That said, Tamil Nadu has been coming to Davos with a lot of interest in gaining new connects, right? Davos is not a place where you sign MOUs. We don't feel that way. Tamil Nadu does not feel that way, and Tamil Nadu has never signed MOUs in a big way in Davos. Even last year I told you about this. We don't believe that you can sign an MOU with somebody you've just met 3-4 years. This is a place where leads get started, right? For instance, last year I met somebody in the textile raw material space here. Now that's going to get converted in the next few weeks in Tamil Nadu. So it takes a year for us to go. For actual investments, this is how things are. If you want to just create a massive painting of MOUs done, go ahead. That's your ballgame. But that's not what Tamil Nadu does. We are serious players. I keep saying this every now and then. We want to go the Japanese way. When a Japanese investor signs an MOU, that means he's already worked on it for about 2.5 years or so. You know, and before that the page is inked. So that is the way Tamil Nadu is going. We don't have to prove a point to anyone. We are the number one by a long margin. I told that with the CM on stage also yesterday. It's a good
the
kind
CM
of
Maharashtra, you mean?
But I mean, they are ahead when it comes to the economy. But again, they have Mumbai, so I told them that too. But that's the kind of competition you need, right? States competing with each other to provide for India. And that's what I think India now is all about. It's from the states, of the states, by the states.
India lives in its states, and for India to prosper, India's states must prosper. That is very, very critical. But let's understand what you foresee in terms of future investments. You've seen new investments coming up, for instance, Cisco's new facility in Sri Perumbudur, among many others. What's the indication now as far as investments specifically in the manufacturing sector? Well,
Tamil Nadu has been building on its knowledge capital, right? So we are up there when it comes to talent. We are the talent capital of India. We roll out so many engineers and doctors and the number of PhDs that we roll out, it's unmatched. So we are going the R&D way. We are going the smart manufacturing way. The world is looking at smart manufacturing in a big way. AI is in. It's in. You cannot deny that. It's going to break a few jobs, but for me, I think it's going to make a lot of other jobs also, because of the talent that Tamil Nadu has, the talent which has been enabled by over 100 years of Dravidian model governance. This has given us that talent capital with which I think today's world will find Tamil Nadu as the number one destination for investments in the AI space and smart manufacturing space. We are the manufacturing capital, so obviously we will see more investments coming in that way. And we are upscaling our talent, which are existing already, and also those youngsters coming out of college and schools now via skill development initiatives like the Non-Modalvan scheme, which the Deputy Chief Minister through Udayanidhi Stalin heads that. So you do know that when a Deputy Chief Minister is given that responsibility, you know that the Chief Minister looks at it at that level, and that has given us results. Every manufacturer, every investor who comes in now knows that the talent that he needs for his investment to prosper is available or will be made available by the government at their own expense, right? So that's where this government or this state is completely different.
Well, you're still tuned into Mid-Cap Radar. As you can see, most of the indices continue to trade with a negative bias. The Nifty, that saw a brief intraday recovery around 11:45 a.m., once again gave up all of its gains, now again trending near the day's lowest point. What's doing well in what is otherwise a very weak market is a few FMCG names. So names like HUL, names like Marico, names like Colgate-Palmolive. These are some of the stocks that are actually managing to hold their head above the flat line, at least in today's trading session. But it's now time for the Growth Code, an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you make well-informed trading decisions. This week, pro trader Rajesh Baheti, Managing Director Crossie's Capital Services, gave us insights on the new SEBI guidelines for algorithmic trading.
So currently, there is no real regulation as such that debars anybody from trading in algorithms or using algorithmic trading. What is happening is there are two kinds of algorithmic trading strategies that are being deployed today. On the professional or prop side, as what we do, all of our algorithms are approved by the exchange. The trades are entered as algorithmic trades. There's an identifier in the order sequence that identifies the trade as an algorithm. What is happening with the discount brokerages is that they are giving and exposing their APIs, and anybody with access to that API can either write their own code, or there are some pre-authorized vendors who have already matched their trading strategies to these APIs, and they are farming it out to the retail public. And these trades typically don't get registered in terms of an order identified as an algo trade, but rather as a standard internet trade. And I think SEBI has a problem with that. They don't want the algo trades to be identified as standard internet-based trades. They want the algo trades to be identified as algo trades even for this retail segment who are currently coming in using the APIs exposed by the brokers. What SEBI wants to do is that if you want to run an algorithmic strategy and you want to write your own code, then you've got to get that thing certified with the exchange. The strategy has to be approved. And in case you are outsourcing it from certain vendors, those vendors will need to get registered as some kind of investment advisors.
Welcome back. The index is still 110 points lower, but a stock that is been making headlines since the morning is Newgen Software, and that is down almost 15%. At one point was down 18%, and that is our mid-cap spotlight for the afternoon, and Rima is here to shed more light on Newgen Software. Rima.
So Newgen is under pressure because of the Jefferies downgrade. Jefferies has downgraded Newgen to an underperform with a target price of $12.40. Q3 revenues and margins were a miss for Newgen. They say the key reason for the miss is continued moderation in their annuity revenues, which basically gives you a lot of predictability. And the annuity revenue growth was just about 9%, and that was the key negative surprise. And the management said that this is on account of the larger deals having longer implementation cycle. Also, if you juxtapose the weak Q3 numbers, versus the kind of rally we've seen in the stock, they say the stock has delivered a 17% return in the last 3 months, 93% return in the last 12 months, despite the growth outlook moderating. And therefore, when the stock is trading at 55 times FY26 PE, the risk reward is unfavorable.
Risk reward is unfavorable. There's a significant